I've already done one. Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Friday morning, we are coming to you live from the CNBC-TV18 News studios. I'm Prashant with me, my colleagues Nigel and Surabhi. Guys, good morning.
Hi, good morning, folks. This morning felt like the one on, what was it, 9th of April? Was it? No, 2nd of April. 2nd of April. When he stood out.
3rd of April.
3rd of April, our time, when he stood out in the gardens with a placard. Today, we don't have the man standing with a placard, but we have a whole rate of tariffs across so many countries.
Absolutely. And the news, though, is that, you can call it whatever, but the tariffs are going to go into effect from the 7th of August, not 1st, which basically gives another 7 days.
7 more days.
Some negotiation, some hope. Yeah. And, expect anything from Trump. Overnight, what caught my eye was Triple H. I'm not sure whether you all used to watch the WWF, WWE.
Oh, yes.
Making his way into the White House and talking about fitness and sports. Triple H, and then he did that. Puts the water and
what are the guys'
splashes
actual? He's a very close friend for the last 20-25 years. Very close friend of Trump's.
I thought you were close friend.
Triple H, right? The guy.
Triple H.
Yeah. What is this?
It's a little difficult.
Water fountain guy.
Yeah. We'll get to that. But so imagine Triple H in White House and sharing podium with President Trump as well. Expect anything.
By the way, check out the White House. I think it was a White House tweet. I'm mentioning this because it's your sector, metals, mining minerals, etc. There's a piece of rock coal. And it just says something. I mean,
big
beautiful
coal.
She looks.
Yeah, big beautiful coal.
I think that was 6 or 7 hours back. So there is enough and more, right? Drama, entertainment, whatever you want to call it. But let's take it from the top in terms of what you need to know as we start another trading session. You basically have the tariffs which are going to be effective from the 7th of August. Now, the reason given is that, the systems need to all be ready, etc. Customs and, collection mechanisms as goods come in, they need to be ready. But the point is, we already knew that, right? 1st of August, everyone knew was when tariffs were going to take effect. So this 7 days could have started 7 days before the 1st of August. So it's not as if, so I'm sort of looking at it as an extension in that sense. So all tariffs on the 7th of August, not on the 1st of August. And it gives some countries more time to negotiate tariff rates lower. Actually gives all countries, in whatever way they can, to negotiate these tariff rates lower, us as well. So for example, for the big factor or whatever you want to call it, yesterday was, of course, that 25% plus the penalty rates, etc. as well. So will we be able to do something in the next 6 or 7 days to bring these rates lower? If there is one thing about President Trump is it's never it. There is always room to negotiate. He's a transactional guy. He's a business guy, and and that's a good thing, and of course, sometimes it's a bad thing as well. So, but it's never it. It's never written in stone. It's always subject to negotiations, and as he himself says, loves to negotiate and negotiate on. Let's just sort of look at some of the other factors. So, apart from the tariff bit, you had U.S. equities which kind of fizzled out after opening at all-time highs yesterday. So, the all-time highs was on the back of Meta and Microsoft, which were strong gains yesterday. But then, there were these tariff headlines, and there is non-farm payrolls, the jobs data, which will come out later tonight. So the macro markets which mattered, S&P was down 0.4% last night. VIX went up about 8%. You also had oil prices, which cooled off a little bit. They'd hit almost about 74. So now about 72.5 is where they're at. U.S. data, and especially core PCE, which is the Fed's sort of favored gauge for measuring inflation, it kind of confirmed. It accelerated a bit more than expectations, and it confirmed Fed Chair Powell's warning in a way. At least the market took it as a warning in terms of being data dependent, etc. Dollar index is back to about 100, and it's the first, by the way, monthly gain that we had in the month of July, year to date. So is the dollar headed a little bit higher, or is the trend slightly lower? In after hours earnings reactions, so Apple, the last I checked, 2%, and you had Amazon, which was down 6%. Those rates would have changed. We'll track it. The real reaction will show up as cash markets open later today in the US to these numbers, but these are earnings related. US jobs today, consensus is at about 105,000 jobs. Last 3 months average is 150,000 jobs. So, and there is a bit more focus on this data point, comes out right as US markets open than in other previous months. Now, just to tie in the levels, markets were resilient yesterday, and we actually, given we started sharply lower, then there was a sharp pullback higher. We were up substantially, and then the market was sold off. There was a whisper whether Jane Street is back, right? And at least on social media, maybe half joking. But I can tell you they're not. I mean, at least that's essentially, they're not in the market. But there was a fair bit of movement, and that spiked volumes, especially options volumes, etc., quite high. So here, the Nifty yesterday held the low of 24,598, which is the level we put out yesterday morning as well. That never came into contention, which then basically opens up the possibility that, will we need to go lower? 24,450 to 24,500 is the medium-term support. This we put out earlier as well. I mean, that is only if this 24,598 level goes. And on the way up, resistance is the recent high of 24,956 and the 40-hourly exponential moving average, which is 24,994 or so. For the Nifty Bank, we should not now break yesterday's low. So again, there was a sharp dip and then the market jumped, the index jumped. So the low yesterday was 55,547 and resistance here is the high of 56,406 or so. So that is the lay of the land, state of play as things stand right now. GIFT Nifty will give you a quick sense of how we are likely to start. And we'll pick up from there. About 100-odd points lower is what the GIFT Nifty implied open is suggesting. Surabhi.
Yeah, absolutely. Let's see if some of those lower levels get tested again today, because yesterday the Nifty managed to somehow hold its head above water. But Asian markets are down. I mean, there is renewed worry on tariffs because now these numbers seem to be final, at least for now, and they kick in the next 7 days, as the US president has been saying. So the drop is the most pronounced, interestingly, in the Kospi. The South Korean Kospi is down 2.5% right now, though, of course, they've also got a better deal now with the 15% kicking through. But most other markets, barring Hong Kong, by the way, Japan is down, Kospi is down, Australia is down. But the Hang Seng, as well as the mainland Chinese markets, they're flashing a little bit of green because obviously they've been given not an exemption, but yeah, there's a separate negotiation ongoing. So none of these new tariff and new measures, they don't apply to China just yet. So some green over there. US futures have been down between 0.1% to about 0.3% as well. So slightly subdued this morning. The biggest story in town continues to be the dollar. Even this morning, it's surging above that level of 100. So far this week, it's been on an accelerated pace. The pullback on the dollar index is up about 2.5% this week. This morning, if you just pull up the level, it's at 100.13. So from levels of just, well below 97, now we're talking about 100 plus. Now for us here, the silver lining comes in. That's the dollar index I'm talking about. So, full round 100 on the board once again. For us, the silver lining that we see is, macro. Some good news came out on the fiscal deficit numbers for the first quarter. The fiscal deficit is at 18% of the full year target. So even if you break it down, quarterly, it's not at 25%, it's just at 18%. And the other good news is that capex spending year on year is looking better. Of course, you'll say that base effect, last year we had, a lot of other issues going on, elections, etc. But even then, it's good to see that capital expenditure is a full 1 lakh crore higher than the same time last year. The Nifty down 3% in July. It's been a slow, painful grind down. Are there, lower sides or lower levels still on the table? We'll find out. We haven't tested the zones of around 24,500 just yet. So we'll see. The flows picture is not inspiring any confidence. So I don't have any good news to report over there. Yesterday, in all this volatility and tariff news, look at the selling. 5,570 crores of selling coming through. Thankfully, domestic institutions have been constantly offsetting that. Yesterday, big buying from domestics, almost 6,400 crores. Quickly ending with the earnings scorecard, and we have many, many, many numbers to go over. It's a fairly mixed picture. We don't have one big bombastic outlier number that I'll call out. But generally speaking, Coal India has been very, very strong, above most of those estimates, starting from the top line down. Eicher Motors is in line, no disappointments with Eicher. So let's see if the money gravitates here. And then the others come in. Swiggy, the losses have expanded, so it's not as pristine as an Eternal. Thermax, the margin expansion is phenomenal, and we'll talk about that company, but the revenue is down about 2%. So it's mostly mixed for a lot of these other companies. RR Cable is very good, actually. Like the other wire and cable players, even RR Cable's numbers look pretty solid, 48% up on the EBITDA line. And PB Fintech seems to be reporting a mixed bag as well. So more earnings today. hopefully the big tariff headlines for now are at least out of the way. Nigel.
Well, we had 4 very, very good series, and the July series brought a pause to that run that we have seen. So after 4 straight series, the Nifty ended in the red in the July series. The question is, can we see a pullback in August, particularly towards the second half of trade, because, we'll have clarity on various fronts. In July, just to take a quick snapshot, the Nifty was down close to 3%. The problem was the broader markets. That was down close to around 4.5% or thereabouts. But with the reasoning, weak earnings, too much of paper supply, lack of clarity with regard to the US trade deal. And also, you had some kind of preference to other economies, other markets, because the Indian markets are not particularly cheap. The good news is that, in fact, the India VIX, it continues to remain at subdued levels. It's the lowest we have seen in the last 40 weeks or so. So that's indicating that there wasn't panic selling. There could be more sector rotation that's taking place. And with the VIX sub this 15-odd mark, you'll have to say there's still no panic in the system. At least that's what the data point is suggesting. Moving to how heavy are we at the start of the series? Well, the Nifty futures open interest is as heavy as we saw in the previous series. So that's another data point. What about positioning? The FIs, they have hit, towards the highest we've seen in the last many, many months at the start of the series. So the FI short positioning at around 90%. Take note of that. Diametrically opposite, you have the clients long positioning at around 70%. So that's how they have shaped up. And if you look at it in absolute terms as well, at the start of last series, I recall saying, the problem is we don't have too many shorts in the system. Well, you have to be careful of what you ask for, because now, in fact, if you compare last series, the FIs were net short with 35,000 contracts on the short side. Guess what? Now they are at 138,000 contracts on the short side. So big addition of short positions. I'll tell you what, I like it. I like some short positions in the system. The clients, well, they have added on to long positions. So now they're clocking close to around 1 lakh contracts on the long side. Moving to the options data, well, yesterday there was one strike that was fairly active, which was the 24,700 put. And that saw a fair bit of addition, premium roughly around 108 rupees. So just punching in that number, and in fact, looking at the total setup that we have, well, we have crucial support. This 24,400, 24,600, well, that's the important level. And data points suggest we shouldn't break this on the downside. In terms of today's trade, well, the reference point you have is the recent low and the recent high. So you don't want that band to get broken out. One problem for me is the leverage in the books has been moving up, because the margin trading book a few months ago it had come down to sub that 70,000 crores odd. Now it's moved up to around 92,000 crores, and it's gradually been moving up. So you need the bulls to get their act together. Otherwise, leverage in the system normally hasn't been such a good thing, particularly for the broader market. So keep that data point in mind. Finally, what are we looking forward to in the August series? Trade negotiations with the United States. Can the RBI, push some more liquidity into the system and help the economy recover? And we'll have the MSCI rejig as well. A few stocks will be in focus. Vishal, Megamart, and the likes. Hitachi as well will be in focus. And the Nifty reshuffle takes place in August. Interglobe is a stock that we'll be looking at, because probably we'll have an aviation stock in the Nifty. So those are the top cues.
Okay, all right. So plenty to track, and hopefully August is going to be better than July. Let's start with the equity call of the morning. Then we are getting one from Lawrence Belanco of CLSA. He says there's a confluence of supports provided by the May-June lows around the 24,462, 24,473 levels. He says as long as the price action holds above these support zones, they would continue to give the benefit of doubt to the upside.